On the Spot with Michelle Makori is brought to you by Prime XBT.
I'm Michelle Makori. Thank you for watching. BlackRock, the world's largest asset manager, recently filed for a Bitcoin spot ETF, sparking others like Invesco, WisdomTree, and Bitwise to do the same. The move is a dramatic shift in sentiment, given that in 2018, CEO Larry Fink said that crypto was essentially just an index for how much money laundering is being done in the world. Now, BlackRock has over $9 trillion of assets under management, and Bitcoin has rallied on the news, breaking past 30,000. But will the SEC, which has so far rejected over 30 spot Bitcoin ETFs, actually approve this one? And if it does, what can we expect from the Bitcoin market and the altcoin market? And if we do suddenly have giant institutional investors effectively controlling large concentrations of Bitcoin, is that really such a good thing? Could it hurt Bitcoin's decentralized money mission? Well, joining me to discuss this and more is Neuner, founder and host of Crypto Banter. Ron, great to have you back with us.
Oh, great to see you.
All right, Ron, we want to get your thoughts on a number of topics here, but let's start off with the basics. A Bitcoin spot ETF is an exchange-traded fund that tracks the price of Bitcoin. So let's start off with you helping our viewers understand how exactly BlackRock's Bitcoin ETF would work.
So for the viewers that may know this already, there is already a Bitcoin futures ETF. The difference between a Bitcoin futures ETF and an actual Bitcoin spot ETF is that the spot ETF actually holds the physical Bitcoin as part of the ETF structure. So if you want to think about it, you can think about it as a trust fund that actually just holds Bitcoin and allows investors to buy shares and get access or exposure to Bitcoin through this ETF. That's essentially what a Bitcoin spot ETF, but just easy access to get an easy way to get access to spot Bitcoin.
All right. So again, help us understand why it's different from other products out there, like, for example, the Grayscale Bitcoin Trust, which enables investors to trade shares in trusts that hold pools of Bitcoin, with each share meant to track the current price of Bitcoin. Again, investors are able to gain exposure to Bitcoin without having to actually buy and hold the asset itself. How is that different from the Grayscale product?
The big difference between this and the Grayscale product, well, first of all, the Grayscale product is not regulated as an ETF, but the big flaw in the Grayscale product is the Grayscale product is a trust, and the trust doesn't sell Bitcoin. So it's only allowed to buy Bitcoin. So investors actually don't want to be investing in the trust because you can buy the shares on the secondary market. And today, with Grayscale, because of the illiquidity and because of the fact that this fund doesn't sell Bitcoin, only buys Bitcoin, the trust doesn't sell Bitcoin, only buys Bitcoin, it's trading at a discount of 33% to net asset value. Now, if that was an ETF, there's no way that would trade at a discount to net asset value. It would trade at a marginal discount to net asset value. Whereas today, that trades at about a 37% discount to net asset value.
All right. So with the BlackRock ETF, would investors at some point be able to redeem the Bitcoin, or is it just have exposure to the shares which represent Bitcoin owned by BlackRock?
Well, that's exactly it. So the investors would be able to buy and sell, to invest and de-invest in this ETF. And when they do that, the fund would buy and sell Bitcoin. So it would actually hold spot Bitcoin. And that's the big difference between a futures ETF and a spot ETF. With the futures ETF, it just bases its price on the price of the futures market at the time. Whereas with this one, it would actually hold the underlying spot Bitcoin. It's a much more healthy type of structure, specifically if you believe in Bitcoin. And the reason why it's such a healthy structure, if you believe in Bitcoin, with a futures ETF, because it's a futures ETF, it doesn't actually mean that the buyers are buying Bitcoin. With a spot ETF, every time someone invests, the buyers are buying Bitcoin. Now, if anybody knows anything about Bitcoin, the one real feature of Bitcoin is that Bitcoin is scarce by design, in that there'll only ever be 21 million Bitcoin. And so if you create demand and the product is very, very scarce and the demand is for the spot product, which is the actual product, then that actually takes Bitcoin out of the market and makes it even more scarce. And that's why the crypto community didn't really celebrate when there was a Bitcoin futures ETF, because I said, well, look, this is just a play to play around the price and doesn't actually create a demand for the underlying asset, which a spot Bitcoin ETF actually does create.
All right. So with a futures ETF, it's more subject to market manipulation than a spot ETF would be.
I don't know if it's market manipulation, because a futures ETF gets its pricing from a certain point, but it just doesn't create demand for the underlying asset, which is the Bitcoin. It's just a speculation on price, I guess you could say.
Right. But, there have been concerns that you could have more paper Bitcoin than real Bitcoin out there as we start to have more and more of these derivative products like futures ETF. Does a Bitcoin spot ETF have that same issue, that you could have more paper Bitcoin, if you will, than real Bitcoin, and therefore it's more subject to manipulation?
There we go. So you can't, in a spot ETF, you've got to hold your Bitcoin 1-to-1, which means that there's no manipulation, as you call it, and there's no creating paper Bitcoin. You actually have to hold the spot 1-to-1, and that's why I think it's such a positive product for people who really believe in Bitcoin, because it creates buying pressure for an asset which is fundamentally scarce.
Okay, and that's exactly where we're going with this, and why people are seeing this as potentially such a significant move in terms of being able to move the price of Bitcoin. So break that down for us.
So the SEC up until now hasn't approved the Bitcoin ETF. I think their record is 30-0 or 33-0, somewhere along those lines. There have been many ETFs, many spot ETFs that have been applied for, and none of them have been approved. Specifically, the main reason why they have been denied in all the rejection letters has been around the ability to manipulate the price, and that is because there are no surveillance sharing agreements between any of the exchanges and the SEC. So based on that fact, the SEC has continuously and constantly denied Bitcoin ETFs. It's actually become like one of those like running memes in the industry that, why apply for an ETF? The SEC is just going to shoot it down. That was how it was until BlackRock came along. And for those people who have been following the SEC versus crypto stance, what you'll notice is that the SEC have been a little bit, they've gone up against crypto. They've been a little bit unfavorable towards crypto.
Putting it mildly.
We in crypto say that they've declared war on crypto. Gary Gensler and the SEC have gone against the two biggest exchanges, one in the US and one in the world, Binance and Coinbase, for different charges. Four charges against Coinbase, 13 charges against Binance, very different in nature. They've also declared a lot of crypto assets securities, which may or may not be securities. We don't think they're securities, but they've just declared them securities in those charges. So net, when you take the SEC's hostile approach against crypto, and then all of a sudden you get BlackRock applying for a spot ETF, it's like two extreme things. It's like two absolute extremes. On the one hand, you've got the end of the world, the SEC attacking Coinbase. And on the other hand, you've got BlackRock applying for a spot ETF. And I think it's worth noting now that BlackRock have a 575-1 approval versus rejection or denial rates for the ETFs. And the one ETF that they got denied was an ETF that doesn't report its daily holdings to the SEC, and that was many years ago. They pretty much got a clean record on normal ETFs. And I believe that BlackRock are a very calculated organization. I'm not sure that BlackRock would enter the ETF fray around Bitcoin if they weren't quite confident that they had a good chance of success here. And so that is why all eyes are on Bitcoin and specifically on Bitcoin, but also on crypto right now. And that's why we've gone from, if you looked at the crypto market on the 5th of June, when the SEC instituted charges against Binance, and then on the 6th or 7th of June against Coinbase, it felt like it was the end of the world for Bitcoin and for crypto, and Bitcoin went to $24,800. And now today, as I look at my screen now, Bitcoin's trading at $31,192. And if you look at the bubbles, which the bubbles are green, the banter bubbles, which we call them, they're green. They're showing that the entire crypto market is actually looking green. So it's what a difference 2 weeks makes.
Yeah, 2 weeks ago, many people were in tremendous despair with these crackdowns from the SEC about the prospects of the crypto sector at large. And again, this is why the timing is so interesting, because the temperature towards crypto very icy at the moment, to say the least, with, as you mentioned, the SEC suing Coinbase and Binance. Now, granted, we've established that Bitcoin is a commodity and not a security, so technically out of the crosshairs of the SEC's recent crackdown, but it's interesting timing. What makes you think that, for example, BlackRock is pretty confident that this ETF would be approved? As you said, they have a very good track record on getting their ETFs approved. So are we suggesting that BlackRock knows that something is happening behind the scenes, perhaps?
I'll give you the official answer, and then I'll give you the unofficial answer.
Okay.
Official, BlackRock have a 575 to 1 success versus failure rate in ETFs. They know exactly what they're doing. They have the biggest distribution network for ETFs in the world, I think. And they're very, very calculated. And I don't believe they would have entered the fray. They would have just entered if they didn't think that they were going to do it. That's the official answer. The unofficial answer is that anyone that knows anything about politics knows that BlackRock is the US government. BlackRock is a proxy for the US government. It's the biggest asset manager in the US. It is instrumental in the financial decisions in the United States. In fact, I was listening to a talk about the COVID pandemic and the US government response, and one of the people that the government called about the potential stimulus measures was Larry Fink, and got his opinion about how to do it. So you can't deny the connections between BlackRock and the US government. And I'm being diplomatic here. It actually gets a lot worse. But with that said, there could be a couple of things at play here. We believe that there may be a chance that BlackRock have some kind of deal that kind of like, if you apply, we are going to give you the ETF. Why is that so important? Because if you think about the SEC and specifically Gary Gensler's approach to crypto, he's had a lot of backlash, and he's had a lot of backlash from senators, congressmen, and many, many, many people in politics. He's getting a lot of backlash because of his draconian position on crypto. And I think that he may be in a position where he's got to be seen to give something back. And what better to give back than to give an ETF on an asset that probably deserves an ETF because of it on the merits of the asset, but an asset that the SEC can't really control because it is a commodity. So honestly, we know for sure that Bitcoin is a commodity. That's how it's been regulated. And so it's kind of out of the jurisdiction of the SEC. And since they can't control it, what better way to give something back than to approve the ETF? And if you're going to approve the ETF, well, who better to approve an ETF for than your friends at BlackRock? And so I guess that, to me, it's kind of no surprise. And also, to be honest, I couldn't have picked a better fighter. If you would have come to me 2 years ago and said, look, you're not going to get an ETF approved. All these ETFs are going to be rejected. But eventually, your ETF is going to be approved. Who would you pick to be the best fighter driving your ETF? Answer would be BlackRock. And they are now number one in the line to get it. There are a whole lot of other applications. So on my screen, I've got them. You got BlackRock, WisdomTree, Invesco, Valkyrie, and Bitwise. 2 of those are new filings, which is the Valkyrie and the BlackRock ETF. And the other 3 are resubmissions of previous applications that were withdrawn at the suggestion or advice of the SEC. And they've now been reinstituted. This all happened within a week of BlackRock submitting their spot Bitcoin ETF application.
Okay, so a couple of points to break down there. But let's start off with the idea that this is potentially a gesture of goodwill from Gary Gensler, who's been facing calls for him to resign, for there to be sort of changes in the hierarchy at the SEC, which would effectively have him resign or have a smaller role. So you're thinking that this is his way of trying to win favor and maintain his position potentially?
Look, as we get closer and closer to the elections, I think that you don't want to be out of favor. You don't want to be seen as the the person responsible for the knocks that the party may need to take. And he's come in, as a Elizabeth Warren proxy. And we know how extreme Elizabeth Warren is against crypto. I mean, she's running her whole campaign on an anti-crypto army. I think that you don't want to be that guy. And I think that this may be quite a strategic move to say, look, we're giving something back. Here's the ETF. Now, crypto people, you can go celebrate. It just makes perfect sense.
Right. And as we've started to learn, we're seeing that Bitcoin and crypto is becoming more and more of an issue when it comes to politics and people potentially choosing to vote based on some candidates' positions on Bitcoin, crypto. It's certainly making more of an impact in terms of what we're seeing on the campaign trails, with a lot of candidates vocalizing their support or their positions on Bitcoin and crypto. So that makes a lot of sense, Ron. Now, I've got to ask you more about this whole BlackRock involvement, because you yourself just said that you see BlackRock as a proxy for the US government. That is a pretty big statement. What do you mean by that?
Well, I think, if you were to ask which is the asset management company in the US that manage the most government money, BlackRock is the answer. If you were to ask who is the most politically connected asset manager in the world today, or in the United States today, BlackRock is the answer. Who manages the most government funding? BlackRock is the answer. I mean, I don't know how much more I need to say.
Okay, and yet you just said that if you could choose a champion or fighter for a first move with the ETF, it would be BlackRock. And the idea that BlackRock, of all players, is getting into the space is concerning to Bitcoin purists on many levels. Certainly the point that you just made, that it is a proxy for the government, that it's a proxy for centralization, that it's a proxy for government, which is what Bitcoin is in many ways supposed to be moving away from. I mean, Bitcoin is supposed to offer an alternative to traditional finance. This is the biggest player in traditional finance, could see a lot of Bitcoin custodied at this centralized institution. And there is a lot of concern that it's against the decentralized ethos of Bitcoin. And again, it's not just that it's BlackRock per se, but many view BlackRock in a darker light, shall we say, given that we know it uses its power to force its broader agendas like ESG, environmental, social, governance policies, which focus on climate change, for example, diversity, equity, and inclusion policies. And many, Ron, have been very critical that ESG, although may have had some good intentions at its core at some point, but that it's now evolved into an oppressive tool of control. 𝗍𝗵𝗺𝗲 running for the Republican nomination, he's called it the greatest social credit system. Peter Thiel defined it as a hate factory, likened it to the CCP, the Chinese Communist Party. There's a lot of negativity over the ESG idea. And we know for a fact that CEO and founder of BlackRock, Larry Fink, makes it quite clear that they use the financial clout at BlackRock as leverage to force companies to comply with the ESG mantra. So I'm going to play a clip of what he said about that, and then get your thoughts on the other side.
That's an investment criteria for you.
Well, behaviors are going to have to change, and this is one thing we're asking companies. You have to force behaviors, and at BlackRock we are forcing behaviors. 54% of the incoming class are women. We added 4 more points in terms of diverse employment this year, and what we're doing internally is, if you don't achieve these levels of impact, your compensation could be impacted. Okay,
we're doing the same thing.
And so it's just you have to force behaviors, and if you don't force behaviors, whether it's gender or race or just any way you want to say the composition of your team, you're going to be impacted. And that's not recruiting, it is development, as Ken said. And ultimately, it's still going to take time, but I am just as much shocked as Ken is that we have not seen more opportunities, and we're going to have to force change.
So again, with BlackRock being seen as such a driving force for ESG, and by your own admission, a proxy for government, are you concerned that this could not necessarily be a good thing for Bitcoin?
Absolutely, absolutely not. And I'm going to break it down for you on two axes. The first axis is the ESG narrative. And if you think about the biggest critics to Bitcoin, the biggest criticism of the uninformed is that Bitcoin is not friendly to the environment. It doesn't fit the ESG narrative. And in fact, if you think back to when Tesla bought a whole lot of Bitcoin and said that they were going to accept Bitcoin, the speculation was that BlackRock convinced them, nudged them as a shareholder that it's not a great idea to potentially be doing this. That's, of course, is speculation. The second narrative is you talk about the decentralized nature of Bitcoin. And I think that this is a common misconception, which I think we should clarify here today. Regardless of whether you own Bitcoin or not, whether one party owns all the Bitcoin, that won't make Bitcoin centralized. Because when they talk about the decentralized nature of Bitcoin, they talk about the mining, the approval of the transactions, which take place on computers that are scattered all around the world. And the reason why that's so important is because these computers or miners that run the network, they effectively control the network. And they distribute it all around the world, millions and millions and millions of machines all around the world approving transactions. So when they talk about Bitcoin not becoming centralized, what they don't want is they don't want the miners, the owners of these computers that are approving the transactions, to collude and to be able to change transactions and to wipe out your money in the process, or to change your money in the process, or to change the rules of the game in the process. So I want to just break it down because I think a lot of people don't understand this. A lot of people have heard that there's only ever going to be 21 million Bitcoin. And that's written into code. It's a fundamental part of Bitcoin. The only way that that can change is if the majority of the miners, over 50% of the miners around the world, all agree that the rules need to change. And then they would split the chain. Those that like the old method stay on the old method and keep their computers running on the old method. And those that like the new method go to the new method. And the biggest chain would be the Bitcoin chain. So why am I telling you this? Because regardless of who owns the Bitcoin, the mining still remains decentralized. So if BlackRock want to buy 90% of all the Bitcoin in circulation, they don't affect the computers that actually affect the transactions. So let's go back to it. You asked me, why do I believe that I wouldn't have a better soldier than BlackRock in the race? Very simple. If I'm going to get someone to buy the Bitcoin or to buy the Bitcoin that I've held for so long and that I'm buying now, I couldn't think of a better buyer than the biggest money that for the government and the biggest distributor of asset management products in the United States, which is BlackRock, through all their terminals and their distribution network of investment products. And so if you want to get people to invest in Bitcoin, you need a distribution network. BlackRock have the biggest distribution network in the United States. You also need a buyer that believes in the product. This is the buyer with the most assets under management. Now, it would be kind of strange if they launched a Bitcoin ETF but didn't invest any of their own funds in this amazing ETF that they've just brought to market. That would be quite a strange phenomenon. So to me, I think it's the ultimate buyer for Bitcoin. If a centralized party wants to buy my Bitcoin and hold them in a bank vault because that's where its customers are, that's great. If you don't want to be that and you want to control your own money, you can still go buy Bitcoin on the open market and hold your own Bitcoin and not have any risks of centralization.
Okay, I get all of those points, and I get the point that it's ultimately the miners that make the changes to the protocol, if any, and that you need 51% of them to agree to anything. And I'm glad you helped our viewers understand that. But there is a specific concern in terms of the language in the filing. And I'm reading what it says in the BlackRock ETF filing, and it says, in the event of a hard fork of the Bitcoin network, the sponsor will, if permitted by the terms of the trust agreement, use its discretion to determine which network should be considered the appropriate network for the trust's purposes, and in so doing may adversely affect the value of the shares. So, Ron, people are saying, why is this even in the filing? Why is the idea of a fork even in the filing? And there's concern with a line BlackRock will use its discretion to determine which version of Bitcoin is the appropriate network for the trust's purposes. And I guess the fear among Bitcoin investors is that somehow BlackRock will push for a hard fork, which will transform it from proof of work to proof of stake. Now, I get it that you need the miners to be on board with that, but what do you make of the fact that this line is included in the filing in the first place? I mean, doesn't that raise an eyebrow?
Could there be a filing without that kind of line? I mean, let's just think about it down the line, and let's remove any.
Do other filings have similar language?
They would need to. I haven't checked other filings, but they would need to. And I'll give you let's eliminate malicious intent just for a second and say, under the assumption that BlackRock have the best intent in the world, but tomorrow there is a Bitcoin fork and one party wants to have bigger block sizes and the other party wants to have smaller block sizes, and whatever that means, technically. And the network splits. Someone has to make a call as to which is the correct Bitcoin, which is the real Bitcoin. Now, we in crypto believe that the real Bitcoin is the one where the majority of the mining power actually goes, because we kind of say that's the majority vote and that is the correct Bitcoin or the real Bitcoin. But they need to have some line in the filing to say, if the network forks, which one are we going to deem is Bitcoin? And I think that was put into the filing without any malicious intent. Let me also go one step further, because you spoke about proof of work versus proof of stake. Under the assumption that there is a proposal to transform Bitcoin into proof of stake. And
firstly, help us understand the difference. Help our viewers understand proof of work versus proof of stake very quickly before we expand too much into that.
So the way that miners mine for Bitcoin or solve the transactions is they do a very hard mathematical puzzle. And the first computer to solve the mathematical puzzle confirms the transaction and earns the rewards for confirming the transaction, which is about 6.25 Bitcoin at the moment. In proof of stake, it's a voting mechanism. You stake the Bitcoin, and the people that stake the Bitcoin approve the transactions. So if you and I stake our Bitcoin, we approve every single transaction. And if we make a mistake, it's called slash your stake, as an example. So it's a very different way of approving transactions.
When we say stake, we mean essentially own.
Own, and we pledge into into a pool that we are pledging our coins to be able to use them to empower or to operate the network. With proof of work, we have to invest in very sophisticated, hardcore computer equipment that is capable of solving a mathematical puzzle, which gets harder and harder and harder the more computers there are on the network. And that is the hash power or the computing power that secures the Bitcoin network. The bigger the network gets, the harder it is to approve these mathematical puzzles. The more computers you need, the more safe the network becomes. That is one of the geniuses in the design of Bitcoin.
Okay, and we saw that Ethereum, for example, moved off of proof of work and onto proof of stake, and that raised some concerns that it allows more control for those that have more of the token. Bitcoin, very much a proof of work protocol at the moment. But I interrupted you while you were making the case that we shouldn't necessarily see this line in the SEC filing as problematic or as an indication of malicious intent. I interrupted you to help our viewers understand the difference between proof of work and proof of stake. And of course, proof of stake is also considered way less energy intensive. So continue making that point, please.
I understand your conspiracy theory. The conspiracy theory is because BlackRock has an ESG narrative and there is this asset that may not be ESG friendly, BlackRock's big plan is to buy up all the Bitcoin, or as many as they can, and then to transfer it from proof of work to proof of stake, and then to then change the network, because they have this line in their terms that says we can decide at our own discretion which is the real Bitcoin, the proof of work or the proof of stake. But that's not true. Because if there was a proposal to split Bitcoin from proof of work to proof of stake, the miners would have to vote on that proposal. right?
Yeah, absolutely.
And
And I get, go on.
Have invested a lot of time and a lot of effort and a lot of machinery in buying these proof of work machines, which cannot be used for proof of stake. And so naturally, the vote would go towards proof of work. Now, some of them may go towards proof of stake. But unless over 50% agree to go to proof of stake, then the proof of work chain remains the real chain and the Bitcoin chain. And if that's the case, I don't see how BlackRock can then convince over 50% of the miners that the proof of stake chain becomes the real chain. And so I think it's just a conspiracy theory. It's one of those theories where people are always looking for the bad in BlackRock. And to be honest, I don't blame them because, they're so affiliated with the politicians. But with that said, in this case, it's not a theory that I can see how. It's not a theory that is possible to execute.
All right, I get it. I get that you need the miners on board. People have been flagging, though, that this is an interesting line in the filing. I haven't read the 32 other filings, to be fair, so I don't know if they include similar language. Again, it's not my conspiracy theory. It is a theory out there, which I'm glad you're able to address. Journalist Chris Black actually formalized this theory in a tweet. And I'm going to read what he said. He tweeted with regards to BlackRock and the ETF here: runs first and largest Bitcoin ETF, becomes wildly successful. And here's the key part, Ron: heavily funds Bitcoin development. So I guess that means gets involved with the miners, proposes regulatory and eco-friendly proof of stake fork, loses community opinion, but adopts fork as Bitcoin anyway, as do most governments, proof of work fork just for pirates and El Salvador. Now, again, granted, critical part of this is the investing in the infrastructure, but you're very comfortable dismissing all of this as never going to happen.
I mean, it can happen. And if it does happen, then there'll be a fork of Bitcoin. And those that want to buy the proof of work Bitcoin can buy the proof of work Bitcoin. And those that want to buy the proof of stake Bitcoin, buy the proof of stake Bitcoin. Remember, when there's a fork, the one doesn't cease to exist. It just both exists simultaneously. And then what would happen to BlackRock's ETF if they didn't go with the majority chain? I believe that everyone would just sell the BlackRock ETF, dump it onto the market, and then go and buy another ETF, which is the proof of work ETF. And by that time, based on this spreadsheet, only 7 days after the BlackRock application, I believe that there'll be many other options that either go with the right chain or don't have that line in at all. And so that is not a theory that I'm concerned about, to be honest.
Okay, so you're not worried that BlackRock will fund Bitcoin development and then subsequently create a hard fork, which would turn Bitcoin into proof of stake. Got it, Ron Neuner from Crypto Banter. Not worried about that at this point. So given that this is seen as such a big development for the potential market-moving action for Bitcoin, what do you think is the probability that this succeeds? Percentage-wise, 50-50, higher? Seeing as we've just established, BlackRock probably has some kind of inside info, probably confident that this would get approved. What do you put it at?
Higher than 50%, much higher than 50%. I don't think it's 100%, but it's certainly somewhere above 50, between 50 and 100%. Again,
right, suitably vague. Do you think 80% likelihood of this happening?
It's hard for me to say because I don't know what's going on in the background, but if I were a betting man and
which you are,
you put a gun to my head and you said, look, you got to take your kids' university fund and put it on either yes or no, I'm putting it on yes.
Okay. I'm glad that you used your kids' university funds for this bet, because I have seen you make much more interesting wagers on your show, which involves parts of your anatomy. So I see we've moved off that one. I'm glad we're talking about your kids' university funds. But yeah, hope for your sake. And
for those who are listening to Michelle here, my show is actually a PG-rated show. So you don't need to worry about the blue part thing. It's a PG-rated show. Anyone can watch, even your kids can watch.
All right, I'll clarify what I meant. You have previously bet one of your testicles on a Fed decision, and thankfully for you, you were correct on that decision. But yeah, I get it. You're very, very confident, more confident than not that this will actually happen. So Ron, if it does happen, what do you see Bitcoin doing price-wise?
I think it could be a game changer. And I'm not going to give you the excited crypto bro answer because, right now, the crypto bros are all looking at this chart over here. And they're saying, if you look at this little arrow over here, that is where the first or the GLD ETF was launched by BlackRock. And look what happened to gold after that. Gold went up 5x from there in, 7 years or whatever the number is, which for gold is actually a good record. For crypto, that's considered, just a day in the life of. I do believe it's a very, very, very positive thing for Bitcoin. And I'll clarify for you why. There is no easy way to access Bitcoin at the moment for institutions, for funds, etc., etc. There are two avenues for institutions. There's three avenues for institutions and funds to hold Bitcoin. One is a Bitcoin futures ETF. The problem is that a Bitcoin futures ETF, because of the contango effect, returns or has returned about 11% less than the actual underlying Bitcoin because of the fact how futures contracts work, that they're going to be open and closed. The second way for an institution to get hold of Bitcoin at the moment is to actually buy and hold Bitcoin. Now, I don't know about if you've ever tried, but buying and holding Bitcoin as an individual is really, really hard. You have to remember this thing called a private key, which is like a unique, safe bunch of numbers that open your wallet. And if you lose those, it's gone forever. There's no way to recover them. There's no way to speak to anyone. There's nothing that you can do. It's very, very, very hard right now to buy Bitcoin and store Bitcoin as an individual, and much, much, much harder as an institution where, there are multiple people that need to access it at different times. You need to have multiple signatures, etc. It's very hard. The third way to get access to Bitcoin as an institution is to buy shares in the Grayscale GBTC Trust. Problem is that, as I said, the trust doesn't sell Bitcoin. It only buys Bitcoin. And so at the moment, when there's no real demand, or when demand is much less than supply, you get your shares trading at a discount. And that's not a great place to be for an institutional pension fund manager. But if you get a Bitcoin spot ETF, you now really open all of this money coming into crypto with an easy way to access this asset, number one. Number two, BlackRock have an unbelievable distribution network for their ETF network. I'm trying to get you some stats here. I don't know if I have any of the stats in front of me, but long story short, they have an amazing distribution network through a system that they provide, which allows investment brokers and investment managers to access investment products. They've got the biggest one in the United States. And they have very, very high incentives for managers to sell their products, because obviously they make money on their product, right? Management fees, et cetera, et cetera. And so you've now got the biggest distribution network of money in the United States distributing this product for you. And so I think when you combine the ease of entry into this asset class, plus the historical returns, and I remind you that Bitcoin has been the best performing asset, no matter which time frame you look at. If you look at a long time frame, and even this year, I think Bitcoin's up about 70 or 80%, which is I think the best performing asset class, definitely the best performing of the major asset classes. When you combine the advertisement that price provides with the ease of access and the increased distribution, it's kind of like a slam dunk. And that I think that's why the market is reacting the way the market's reacting. And Bitcoin is up. Let me quickly just get you some real numbers. It is up 25% in the last 8 to 9 days.
Yeah. Okay, so if it does get approved, do you care to make a prediction of what the initial reaction would be, and as the fund gathers more and more investment, how you see Bitcoin reacting?
I hate making price predictions because.
But I always make you.
I would say that if the ETF does get approved, Bitcoin is trading at least double what it's trading now. At least it's trading at 31 now. So I'd say if we do get an ETF approved, it goes to double that. A lot of it depends on what the economic climate is and the economic factors are at the time. You're asking me to predict, economic factors and monetary policy and everything else. Could be a year. I mean, the SEC have got until I think about February to approve this. So yeah.
And as you say, we have it in the context of a Fed that seems intent on continuing to tighten, if we're to take Jerome Powell at his word, and potentially more liquidity taken out of the system as the Treasury fills its account. So I get that a liquidity factor is important here as well. You mentioned that this gets approved in February, potentially. Aren't we expecting the halving right around April, I would think? Is that the...
Yeah, I think the halving somewhere between February and April. I don't have the actual block in front of me, but it's somewhere around there. And there's a lot of people who don't understand what the halving is. So let's just quickly summarize what the halving is. In processing these Bitcoin transactions, the miners or the computers receive a reward, which is auto-generated by the Bitcoin algorithm. The reward was 12.5 Bitcoin, and then halved to 6.25 Bitcoin. And it halves every 4 years. And the next halving is in 2024. And as you say, it's somewhere around between Feb and April.
Yeah. So we're going to have less supply potentially at a time when demand is really accelerated with this ETF, which bodes very well for the price of Bitcoin. You're saying at least 2x modestly. So Ron, what would it mean for other altcoins if this does get approved? Does Bitcoin suck all the oxygen out of the room, or does it lift up the rest of the crypto market? Keeping in mind, we've also got a lot of uncertainty with regards to the SEC there.
You've got three things at play here. You've got the halving, you've got the BlackRock ETF, and then you've got this thing called elections. And we have now realized that Bitcoin and crypto are very much election issues at the moment. If you look at all the candidates, I'm not going to say all, but most of the candidates that have put their hat in the ring, you will notice that every single one of them has taken a favorable position on Bitcoin and crypto. Kennedy spoke at the Bitcoin conference. Ron DeSantis has been extremely vocal. Francis Suarez also came in and is actually receiving his salary in Bitcoin. What I'm trying to show you here is that the market is telling you, the politicians are telling you that Bitcoin is an election issue and that they're going to be using it to campaign. So you've got those three forces at play all at once, somewhere between Feb. And that's why I'm actually deploying a lot of my capital now into Bitcoin, because I'm kind of seeing the road forward and I'm going, unregulated, because you've already thrown your regulatory punches. You have applied for an ETF, there's the halving and there's the elections. To me, those are all great tailwinds for anyone holding Bitcoin. And that's why at about 25,000, I started laddering up again. And I recently just bought another batch just before we started at 31,000. So confident enough to keep buying. Let's talk about the altcoins.
Yeah. And of course, though, Ron, in that context of the first quarter of next year, I mean, there are some predictions that is when a potential recession could hit, even though the likes of U.S. Treasury Secretary Janet Yellen saying that she sees the chance of a recession diminishing now. But there is still the concern of the macro environment, which would then be a headwind for Bitcoin, of course.
Yes, I think there's always economic concerns, in economic environment. This recession that they speak of, I've been waiting for a long time. In fact, it was promised to us in Q2 of this year, and we're in Q2 of this year, and it looks fantastic. I read the same Fed notes that you read, and all the Fed speakers, all the Fed governors all said that they don't see a recession this year. So if this recession is coming, I'd like to see it. I'm not one of them.
I'd rather not.
I'd rather not.
But yeah.
But I think we should just get used to the fact that macroeconomics are going to do their thing and markets are going to do their thing. And
right.
that Bitcoin is, I'm not going to say doesn't follow what the markets do, but Bitcoin acts as a digital gold and a store of value when it needs to. And it acts as a technology product and a product that responds to high liquidity if it needs to. And so you've got this dual, if there's a recession, people will be scared of the Fed. They may flock into gold. If they flock into gold, Bitcoin gains as this digital gold. If there's a tech run and a NASDAQ run, people treat Bitcoin as a tech instrument and it starts being correlated to the NASDAQ. So I'm not too concerned about macro. I mean, I am concerned, but I don't think that the end of the world's coming next year. I think it's going to be business as usual.
Okay, so let's get back to your altcoin prediction then, if Bitcoin's ETF does get approved, and if we will have the halving, we have all of these positive forces, what does it mean for the altcoin market? Is it a rising tide lifts all boats, or does the oxygen get sucked out and focused on Bitcoin? What do you think happens there?
I think that some of them, I think that every cycle, I think altcoins should be seen as proxies for a technology cycle. And when you look at the previous technology cycles, any technology cycle, not only a crypto technology cycle, you always have an altcoin reckoning or a technology cycle reckoning where 95% of all the players are wiped out, and those that survive like the gladiators. And, you had this in the dot-com bubble where 95% of the companies were destroyed and pets.com got wiped out and whatever else. But we got Amazon, we got Google, we got Microsoft, we got Apple, we got Facebook, we got whatever else that emerged from those ones. So I think what's going to happen is we're going to get a lot of these altcoins wiped out. Some of them will get wiped out by the SEC. Some of them will get wiped out by the business cycle. And some of them will get wiped out because of a very interesting phenomena, which is very unique to crypto. And I think it's very, very, very important that people watching this understand this. When you are investing in a company, you are investing in a bunch of people, a management team, a bunch of shareholders. And those people, management team and shareholders, can pivot when they see a change in the economic conditions and can pivot when they see a change in what their competitors are doing. You'll agree with me, right? So if I'm in technology, in equity, I'm investing in a management team that I believe is going to be able to fight the headwinds no matter where they come from. The difference between that and investing in crypto is in crypto, you are investing in a protocol. The protocol is designed to do what it does in its white paper or design. And from that point on, you can make minor tweaks to the protocol, but you can't do a 360 pivot or a 180 pivot like a management team can do if you think you've gone in the wrong direction. And I think a lot of these protocols have been experimental. They seemed like good ideas at the time. And that is what investors invested in. And unlike a company, a protocol cannot pivot. You cannot be a layer 1 blockchain one day and then tomorrow become a layer 2 blockchain. It just doesn't work because that's not how the code is written. And so blockchain investors need to understand that when they invest in altcoins, they're investing in one roll of the dice, not multiple roll of the dice, one roll of the dice. And if that roll of the dice is not slam dunk, it's going to go to zero eventually because there's probably going to be no use case. And that's why I think that the majority of the altcoins get wiped out. But those that survive become the Amazons, the Googles, the Microsofts of our technology subset. And so now more than ever, if you want to be in altcoins, be in the ones that you think are really going to fundamentally change the world, and ask yourself a question: if in 3 years that thesis is still going to be around. If that's the case, hold on to the altcoins. You may get life-changing returns, but if not, they're probably going to go to zero.
So, of course, without getting into too many details, because we're running short on time here, Ron, it does beg the question, which altcoins do you see then doing well as this Bitcoin ETF gets approved and Bitcoin goes up? Which altcoins come along for the ride and have the fundamentals that you speak of that will make them relevant in the future?
I'm going to break it down for you into a couple of different categories. And I'm going to maybe mention 1 or 2 coins per category, but that's not because I want your viewers to be buying those specific coins. I want them to understand my thinking. I see blockchain in multiple narratives. The first one is a layer 1 blockchain. It's the transaction layer. Ethereum, Bitcoin. There's one called Solana. Solana has been hit really, really, really hard. Sam Bankman-Fried was its biggest token holder. The SEC just declared it a security in their accusations against Binance and Coinbase. And so it's been hit really hard. But from a usage and fundamentals point of view, Solana is the most used blockchain after, the most used of the major blockchains. So to me, I'm looking at layer 1 blockchains, and I think that that's a great place to be. The next place to be is anything to do with trading, and specifically decentralized trading. Why? Because the SEC has gone for the centralized exchanges. Binance, Coinbase, they're all centralized. The exchanges that are, they owned by a bunch of shareholders, and they are centralized exchanges. But there is a world in crypto which is called a decentralized exchange, which is not owned by anyone. It's a piece of software which allows two people to trade without any human intervention. So it's a contract that would allow me and you to trade without us having to leave our money in the exchange or in the bank account of the exchange. And for me, that's a big narrative. And the narrative is not only these decentralized exchanges, but decentralized perpetuals exchanges, decentralized options exchanges. So I think the entire exchange system is a good place to place your money. Why? They say in a gold rush, you should invest in the picks and shovels. You should invest in the infrastructure and not necessarily in the individual mines. And I think that that's the theory. You don't have to pick a winner. Just invest in the place where the winners are going to be traded. And that way you're agnostic of a winner. And so that's another place where I'd put my money. And lastly, I'm going to give you another one, which your viewers maybe will be a little bit shocked by. But I think that if you're bullish on crypto, your best bet, and you don't want to be an active manager in crypto, and you don't want to take active decisions because you're just not smart enough and not in touch enough and not in tune enough to make active decisions in the crypto game, I've got a great proposal for you called Coinbase. The biggest centralized exchange in the United States. It has played by the rules from the get-go. Well, as they have played as close to the rules as they possibly can from the get-go. They've always been the clean guys. When the Binances and all the other exchanges went for all the altcoins, quick listings, no KYC, Coinbase always played by what it thought was playing by the book. Now, Coinbase have a small fight against the SEC, 4 charges of failing to register as a broker and trading unregistered securities. And they've got $5 billion in cash on their balance sheet today to fight this fight with the SEC. They're a strong fighter. And chances are that if anybody's going to win the fight, it's going to be Coinbase. If Coinbase do win the fight, right now the SEC has also gone up against Binance. And Binance seems to be falling out of favor with all the regulators. Binance is effectively out of the US, they're out of Canada, they're out of the Netherlands. They are out, as of today, out of Belgium. As of while we're speaking, they've got to cease all operations. They're out of Australia too, because of all these misconducts. Who is going to fill that void? Well, logically, if you had the cleanest exchange in the United States start to expand offshore, it would be a great option for this to happen. And so for me, at a $13 billion market cap where Coinbase is today, I'm kind of looking at it from the eyes of a non-crypto investor, thinking I want access to this asset class, but I'm not smart enough to go and work out which assets to buy and sell. Exchange. Just buy the exchange, the most regulated exchange in the world, and the one that has the most chance of scooping up market share. I think it's the best investment that you can make in crypto today.
And of course, Coinbase has also partnered up with BlackRock for this spot ETF. So if that does get approved, it's obviously good for Coinbase's future. And as you said, you're pretty optimistic that this SEC case will get resolved and that part of the potential approval of the BlackRock ETF is because the SEC may want to win a little bit of favor or backpedal a bit. So it could bode very well for Coinbase, considering it's partnered up with BlackRock there. Ron, what happens though if this is rejected? If we're wrong, if you're wrong, and this does get rejected, or at least rejected in the first couple of rounds, what kind of price movement do you expect?
I mean, we were there a week ago. Bitcoin goes back. Again, I think there's fundamentally going to be increased demand for Bitcoin anyway. I don't think that Bitcoin is only running because of the SEC, the ETF. Before this ETF announcement, but also before the SEC attacked Coinbase and Binance, Bitcoin was trading at between $27,000 and $30,000 anyway. I kind of think that we are where we are, and that if we do get approved, then it's just a bonus. And if not, well, then we just continue growing from this base over here. Look, we want an ETF. It's great. It brings institutional money.
So you don't see a major knock if it doesn't get approved? You don't see, like, perhaps we've seen a 25% rally on the news that it's been filed and could be approved. Do you at least see a 25% knock to the downside if it comes out as not approved?
We had 30 ETFs denied. It's like, for us, the idea of approval is very exciting, but being denied again doesn't really faze us. It's like,
okay.
It's happened 30 times. It's happened 30 times.
I think 33. I think it's between 30 and 33 times. Okay, but I get it. Tremendous upside if it does get approved, but not that much downside if it doesn't get approved, because we've played this game before and it hasn't really ultimately been so detrimental to Bitcoin. Ron, final thoughts as we wrap up. Speculation about a potential Ethereum ETF. Could you see that happening next if this one gets approved? Or is that a whole other kettle of fish?
First of all, I think it's going to be one step at a time. Second of all, I need to highlight the following. If Ethereum remained on proof of work where it started, then there would be very little difference between Ethereum and Bitcoin. And then once a Bitcoin ETF would have been approved, it would have been logical that an Ethereum ETF would have just been a carbon copy, just with a change name, insert name here, follow the plan. Problem is that they went to proof of stake. Now, for the viewers, the big difference between proof of work and proof of stake is, with proof of work, the miners earn a reward for mining the Bitcoin. They earn a reward for buying software that works and generates returns. With proof of stake, you get interest for staking your tokens into the network. It's literally quoted as an interest rate, 5%, 3%, 10%, whatever the interest rate is. The problem with an interest-generating product is that it then falls under the ambit of having to be registered as a security. And that's why right now, no one's talking about Ethereum. It's almost like, look, let's not talk about Ethereum, because the SEC have hinted that they believe that all proof of stake tokens are actually securities. Solana, Cardano, everything, all the tokens that they cited in the Binance and the Coinbase regulatory actions are all securities. And they're all proof of stake. But they haven't come after Ethereum. And they haven't come after Ethereum because of a speech by an SEC executive called Bill Hinman, who came out and said that Ethereum is not a security. He believes that Ethereum is not a security. And so it's a bit of a gray area, because that was the old Ethereum. It was the proof of work Ethereum that he said wasn't a security. But what happens now that Ethereum's changed from proof of work to proof of stake? And so I think what we need before we get an Ethereum ETF is we need them to just get off our backs with the Bitcoin ETF and just get the playbook approved. Then we need them to just leave Ethereum alone as an asset and say, you know what, this is not a security for the following reasons. And once that happens, then we open the door for an ETF on Ethereum. But I think for as long as there's a misclarity or non-clarity or less than 100% clarity on whether Ethereum is a security or not, there's not going to be an ETF.
Okay, so still a long road there, but if this Bitcoin spot BlackRock ETF gets approved, you see the Bitcoin price doubling. I mean, we're at what? We said 31,000 today, so that's 62,000. That's not too far off of the all-time high. Safe to say we hit a new all-time high pretty quickly after that approval?
I mean, yeah, I would have gone at a much higher value, not only because of I just want to be conservative because I know what's wrong. I know how silly you feel when you made a very high prediction and you haven't accounted for all the economics that may happen down the line. But given the fact that we've got the halving and potentially an ETF at the same time, I think the price could actually be much, much, much higher. I'm just being conservative. I know this is Kitco. I know that your viewer base doesn't appreciate the crypto bros coming in here and making and so I'm trying to be a little bit more mature and conservative.
Okay, at least 2x. Got it. All right, we're going to wrap up now. Ron, any final thoughts?
I mean, yeah, I think it's a very positive thing. And I think, one thing about Bitcoin is 2 weeks ago, you know me, I'm the most passionate crypto person in the world. And 2 weeks ago, even I felt beaten. I felt like we fight so hard every single day in good spirit on this amazing asset class that can change the world. And we're fighting the biggest enemy in the world, which is the US government. Here we are 2 weeks later, and the entire sentiment has completely changed in Bitcoin and in crypto. And so the one thing that I've learned being in Bitcoin and being in crypto is that for some reason, Bitcoin and crypto always survive. And when it feels the most uncomfortable to be pressing that buy button, that's the time that we should be placing our bets on crypto. I did it this time. I landed up buying Bitcoin at 25,500, and it was like, I'm going to do this, and please God, pray for me. And today I'm, as you can see, pretty euphoric about the decisions that I made. And so I just think that we've proven that crypto as an asset class is extremely, extremely, extremely resilient. And every time it feels like it's the end, we just get stronger and stronger, and the asset class gets bigger and bigger. And that's where we are today.
And I'm going to wrap up with what we heard from Fed Chair Jerome Powell recently, where he said that he thinks crypto as an asset class is here to stay, paraphrasing him there. But Ron, thank you so much. Really appreciate you taking the time. Ron Neuner, always good to have you. Thank you.
Thank you, Michelle. It's been great as usual.
All right, and thank you for watching. A special thanks to our sponsors, Prime XBT, and there is a special offer for our viewers in the description for Prime XBT, so please check it out. I'm Michelle Makori. For me and the rest of the team, we'll see you soon. Keep it here.
Begin your path to financial freedom. Gain up to a $7,000 bonus on us. Register and use promo code. Deposit and enjoy a 7% bonus. Available now. Link in the description.